get started.
Welcome to the Financial Purpose Podcast. All opinions expressed by me or guests of the podcast are solely our own opinions and do not reflect the opinion of Life Moves Wealth Management. This podcast is for informational purposes only and should not be relied upon for any investment decisions. Clients of Life Moves Wealth Management may maintain positions in the securities discussed in this podcast. Hey there, and welcome back to the Financial Purpose Podcast, episode 64. It's the end of November when I'm recording this already. That's gone so super fast. We're on Thanksgiving week. It's just been, the month of November has been insane. I had some travel. It's going super fast. Everybody's trying to do end of year things. And that's what we're going to talk about today. We're going to talk about end of year priorities, things that you might want to be thinking about before we get to December 31st, and certainly before you run off to hang out with Santa Claus and build snowmen and things like that. These are very important financial things to be thinking through. And I want to go through this now. Everything I'm going to talk about today, you can find on the Life Moves Wealth website, lifemoveswealth.com/blog. And Essential Year-End Financial Priorities is the name of the post. There you can also download this guide that I'm going to reference, and it looks like this. If you're watching, it's a nice two-pager with some checklist items. If you're listening, it's a nice two-pager with some checklist items. So go to lifemoveswealth.com. You can download it for free, work through it just to see if there's anything that you might want to check off or be thinking about, again, before the end of the year, maybe some things you need to do financially before the end of the year, just to make sure everything's aligned. So, and then, of course, if you're working through the worksheet, anything that you have questions about, send an email to info@lifemoveswealth.com and just put end of year planning in the subject title, and I'll be happy to go over any of that with you. So I'm going to just read through this post, and we'll see what we come up with for year-end things. And some of these, by the way, I've already started working on for myself for year-end, and a couple of them I've actually had to sort of reposition because we had a little bit of an incident at home over the past couple of weeks. We had a rodent of some sort. I don't know if it was one rodent or 75 rodents, but got into the garage. We've never had a rodent in the garage, and this thing or these things unleashed holy hell on our garage and chewed through wiring in Melissa's car, and so that was a nice, very expensive repair that we weren't planning for, and again underscores all the reasons why it's important to have a cash reserve and a strategic plan if something like this comes up. But hopefully that's not happening to you. Sometimes year-end can be fun things. Sometimes year-end like that just kind of steals a little bit of joy because it pulls money that I had planned for other things, but now, redo planning. And again, that's why we do financial planning all the time, because things happen and we move on. So year end, as we get started here, it's a pivotal time for all of these financial planning considerations, whether you're managing a business or focusing on your personal wealth. When you're reviewing these key financial areas, do it now. I know it's the end of November. This post I put up a couple weeks ago, but getting started now, it's going to help you think about how to save on income taxes for this year, or possibly to do some good income planning for 2025, help you optimize cash flow, especially around the holidays. Things can get very expensive, and it helps you set clear goals for the coming year. Now, I typically like to work on goals for the coming year in the month of October because it gives me 2.5 months to really think through what I want to do, how to implement, and then I hit the ground running January 2nd because actually January 1st, sometimes I actually will just get right to work, but a lot of times that's a good day to just start the year off. Usually I hike with friends or we're camping, and then January 2nd we get to work. So this podcast, this is a guide for essential steps that I'm recommending for clients, business owners and non-business owners alike, to close out the year strong. So the first thing that we want to start with when we're thinking about how to close the year strong is to review financial statements and cash flow. Understanding your financial health is the foundation of effective planning. Business owners should review their income statements certainly before year end and their balance sheets. There's usually going to be some key indicators there of some things that you might need to do before year end. A lot of times that's around things like, do we have enough profit to do profit sharing or to give bonuses for the holidays to employees, or do we need to finish out contracts or maybe push contracts to the new year to get them out of this tax year, or to manage cash flow, or do we need to quickly pull in AR to meet our year-end number, our quarter-end number, or do we need to push income out to preserve taxes? There's a lot of things that you want to be thinking about doing, and that's also very true for non-business owners. You want to be thinking about personal cash flow, income, same things, patterns of spending and expenses over the past year. Do you need to ramp up cash flow over the next 30 days or cash reserves over the next 30 days in order to pay for everything that's going to come due for you in January? Or do you need to take cash that's available now and pay off anything, make last-minute contributions into IRAs? Do we need to do Roth conversions, right? All of these things kind of come up. So the process of thinking through income and expenses and tax-related items, it certainly helps you identify overspending and potential areas where you can save. In the business, it helps you spot revenue trends or opportunities to increase income over the next year. And it also confirms that you have sufficient cash reserves as we start the new year and kind of end this one. So as an action plan for the next couple of weeks, and do this before you run away for the holidays, set a time where you can have quiet space to go over your financials. Do that either with myself or your financial advisor or your accountant, and look for ways that you can improve cash flow, budget opportunities, business decisions that you need to make, maybe some things that you've been putting off, maybe some decisions that you know you need to make and you just need to move forward. So that's going to be a great way to do a financial review before the end of the year. We talked a little bit about taxes. So optimizing tax strategy at year end is also critical for business owners and non-business owners. There are certain strategies that can lower taxable income and set you up for future tax benefits. So I talked about Roth conversions. This is something that I have done with a couple of clients over the past 30 days or so. And if we have a year where income has been lower than a year before, we've had a great stock market, so we don't really have asset values that are lower. But in years where we might have a market pullback, a Roth conversion can make sense, especially if you're someone who's sitting on a high amount of tax-deferred IRA or rollover IRA, possibly 401k if you're at a certain age and your plan allows this. But it may be a good idea to do a Roth conversion. It's going to immediately start the clock where all of your assets are going to be growing tax-free. And the beautiful thing about that is once you get into retirement age, there's no RMD requirements. You can use the money without penalty, without taxes, and that's very helpful, especially from a retirement income planning standpoint, Medicare spending, premiums standpoint, Social Security taxation, all of those things come into play. And if you're expecting to be in a higher tax bracket in the future, the Roth IRA conversion now can be a really smart tax move. Another thing I touched on is the timing of expenses that you need to make or income that you need to receive. Business owners on a cash basis for accounting, you can accelerate expenses or defer income, while non-business owners may consider things like charitable contributions or donations, retirement contributions, as I said, and think about other ways that you might be able to reduce taxable income while also increasing benefit. I had a great conversation with a client today about making HSA contributions before the year end. They weren't at the maximum. There's a lot of benefits to do HSAs if you qualify for those, and so that could be another place to have some tax benefit, and also a nice little, what I call a good sidecar potentially for retirement. So if you have questions about HSAs and HSA strategy, reach out. Again, info@lifemoonswealth.com. I'll be happy to talk to you about that. And the business owners, review your depreciation options before the year end, because you don't want to close your books on December 31st and not have looked at this. So definitely take a look at that with your CPA. If you have significant medical or educational expenses, review the timing of when you're going to receive those or when you're going to incur those expenses as well. Again, this is all tax efficiency stuff that can be very helpful. So just as a pause, I talked about this year-end checklist that I have in my hand here. And a lot of what I'm talking about in this podcast and even in this blog post are right here. And it's going to walk you through things to consider with assets and debt. It's going to walk you through some tax planning things. Quite a bit of tax planning is there. It's going to walk through some cash flow considerations, insurance planning, which again would go to FSA or HSA contributions and balances before year end. And FSA is a very important one because if you have a flexible savings account, FSA, and you have that overfunded, there is a use it or lose it provision in those. And some companies may allow you to roll over about $640, I think is the maximum for this year, into the following year. But usually you have to use that within the first quarter or that gets gone. And so definitely take a look at those FSA balances, HSA contributions, and that kind of thing. It's also going to walk you through a couple of estate planning considerations and then some other things related to college and maybe some new tax laws that are going to go into effect. Now that we have some certainty around what government is going to look like, we should have a pretty good idea of what tax law is going to look like. And ideally, I imagine for the Trump administration, they're going to want tax law to look kind of like it does right now. And they're going to work to extend the Tax Cuts and Jobs Act or make provisions of it permanent. So I will be talking about changes to tax law as we get more information over the next year. But that's certainly going to be a major financial planning issue, especially if things like standard deductions get moved around, if the estate's tax exclusions get moved around. There's going to be a lot of baseline things that are going to be important for financial planning and certainly for tax planning. So again, we'll continue to talk through those over the next year. All right, back to year-end things. Evaluate key financial goals and performance indicators. As a business owner, reviewing and knowing and managing to your KPIs, key performance indicators, it's an essential process for managing financial progress. And actually the same thing with personal financial planning. There are KPIs. At Life Moves Wealth, we use the Elements system for financial planning, and it gives us 11 KPIs or financial health indicators that clients are constantly updated on. And it's going to help you keep up on things like your savings rate, debt reduction, progress in managing your debt load. It's going to help you measure income growth, net worth growth. Businesses, you might use KPIs to measure sales and customer retention and profitability and days of inventory aging and things like that. So together, you and I, whether you own a business or not, we can work on the right KPIs for your situation so you can manage financial progress. It's really helpful to know where you stand and where you're trying to go, so that way you know how to close that gap. And managing KPIs is the absolute best way to do it, because it's really hard to work toward a goal if you can't see progress. There's some psychological benefit and some emotional health benefit to being able to see how far you've come and what you've accomplished on the path to where you're trying to go. Because sometimes when there's a detour or when life is moving around a lot and things look really uncertain, it can be helpful for you to see what you've already done so you know what to do next. All right, the next thing is review your employee or family compensation and benefits. So whether you have employees, maybe you're the sole provider for your household, the year end is an excellent time to ensure that your compensation and benefits are optimized. A lot of times, if you have two working people in the home, spouses or whatever your situation is, two working adults contributing to the household, there can be a lot of benefits maximization that can push you forward along the direction you're trying to go. For business owners, you should definitely assess employee compensation, what you're planning to pay people for the next year. They most certainly want to know if there's going to be any more money on the table. So your business planning is going to help you do that. What benefits can you bring in to attract and retain key talent? Non-business owners, you're going to be looking at things like life, health, disability insurance for the house. Changes to plans. Open enrollment is generally for a lot of companies coming up in the first quarter. If you're on Medicare, open enrollment is right now and ends next week, I think on the 7th of December. If I'm correct, go back a couple of episodes and watch or listen to the episode where I had Hector and Lauren Dessis in. They're the Medicare gurus, and we talked a lot about all the things that you should know for Medicare and what you should be thinking through as you're looking at your Medicare options. So there's just a little bit of time left on the table to get those done. But those benefits in the family, in the business, this is a great time of year to think about what they need to look like for the coming year. And a lot of that's going to be around the planning for things like, do we have any surgeries? Do we have, are we expecting an increase in dental care needs? Do we have kids going into braces? Are we going to be looking at adding things for our existing employees, or like I said, adding things to attract a very specific key employee or a group of key employees? And so a lot of those healthcare benefits, this is a great time of year to review it, because now you have a good idea of what happened this year. How much did you spend? What benefits did you use? What benefits did you not need? And so then you can right size what you have in your package going forward. So the next thing that we're going to look at is investments, reviewing those, rebalancing portfolios. Doing this at the end of the year definitely ensures that your portfolio aligns with your goals, your risk tolerance, your time horizon for investing. I've started to look at this for clients. We did a rebalance in October for a lot of people, and it was just kind of a wholesale, get everything trimmed back into its proper target allocations. 2024 has been a great year for the stock market. We've made good money, and it's helpful to get that resized in its order, because it's almost certain that whatever worked this year probably won't work the same way next year. That's just the nature of investing. The winners typically don't continue to be winners year over year over year. Why that happens, I don't know. There's a lot of reasons, but things are just going to look a little bit different in 2025. I sent an email to clients last week talking about what I expect in the markets, and I think we're going to have some increased volatility. We have a pro-growth administration coming in. The administration, especially the executive, is going to be combative with the Fed around interest rates and monetary policy, and so that's going to create a little bit of headline risk. And what if the economic data, because we're in a pro-growth cycle and a pro-growth administration, what if the data is strong and the Fed doesn't have a good base case for continuing to cut rates on a steady pace? What if that happens? That's certainly going to cause some issues in the market. It's certainly, if we're pro-growth, that means we're probably going to be lower taxes. Lower taxes means that we're going to continue to borrow as a federal government. If we continue to borrow as a federal government and we don't have a anywhere movement toward getting a balanced budget, then that probably means the bond market is not going to like a higher debt load, which means rates are going to stay high, bond prices are going to be lower. Again, the Fed's going to be challenged. So there's a lot of things that are going to move. There's an air pocket right now I see in where asset prices are versus where they're valued. And whenever there's an air pocket, there's definitely the likelihood that the market will hit that pocket and go down. And we only had 2 real corrections so far this year. Usually we have 3 or 4, and so I'm expecting something to be a little bit bumpy. So this year, right now, at the end of the year, is a great year to just get your portfolio kind of reset. Think about the risks that you're taking. Where have you made money? Is it possible to continue to making money there? Do you need to ring the cash register? Do we need to take unrealized losses? Do we need to take unrealized gains? Is there benefit in doing that? Is there, if you have a highly appreciated stock position, does it make sense to make a charitable donation with those gains? There's a lot of different planning that we can do there. So as a business owner, you also want to think about how you're investing in the business and what expansionary things do you need to do or pro-growth things you need to do in your business as an investment over the next year. Maybe it's a marketing campaign. Maybe it's a new facility. Maybe it's a new product line. Maybe it's a set of new hires that you need to make to continue to grow the business. That's certainly part of my plan for 2025. I'm starting to get to a point where I think I'm at an inflection point, and so I'm going to have to start looking at how do I continue to grow the business and make sure that I have staffing in place to handle the workload so that I can be out and in front of more people and continue to grow the firm. And so there's a lot of things as a business owner that you want to be doing from an investment standpoint, and certainly as a non-business owner from an investment standpoint. And the same is true with your 401ks. It definitely makes sense to go back in there and make sure that those are properly balanced as well as we turn into the new year. As a business owner, it's also a great time to think about where you are on your path of succession or what we call exit planning. Even if you're not planning to sell anytime soon, now is a great time to be thinking about what the future might look like for your business, because every business decision that you make will either add value to your business or it will subtract value. And you want to be thinking about that all throughout your business journey because it's going to change your outcomes. So think about your estate plan for non-business owners. Think about, if there have been any changes in the year, if you're expecting any changes to come in 2025 that need to be addressed with your estate plan. For your business, definitely get your year-end financials in line so you can have good valuation. How is your entity structured? Who are the named people? Do you have a succession plan? Does your operating agreement allow for a proper succession? Is your family cut out of that agreement? Do they need to be protected, right? These are all things that you can be doing near the end of the year just to make sure that you're starting the new year with a clean, ready to go, stronger, more fortified business, more fortified personal financial plan. And it's all on getting everything documented, written down, ready to go. The next thing that you want to do is set a budget and a forecast for the new year. Creating a realistic budget, cash flow projection, we might call it. Again, for business or for personal expenses, it's crucial for guiding how you're going to be able and when you're going to be able to save, when you're going to have an influx of expenses. I already know which months of the year I take on the most expenses, and I know which times of year tend to be a little bit flexible for income. I also know when I have a pattern. There are 2 times of the year where I usually will get an influx of referrals, and then the summer happens and nothing is moving. And I know that about my business. So not only am I budgeting expenses and income, but I'm budgeting time allotment as well. And I know that the summer months are the time for me to get a lot of work done, especially on the business. That's a great time to think through reset marketing plans and things like that. And I bet your business has a cycle. I bet your personal life has a cycle where you spend more some months than you do others. And so you know that some months saving is not going to be optimized, and in other months you'll be able to put more money into investments or into your cash reserve, or you'll be able to go on a vacation because you'll have excess cash, things like that. So having all that written down and projected throughout the year takes away some of the stress of wondering what the next month or the next quarter will bring. It gives you a pretty good roadmap for expecting what's to come and being able to plan around that, and knowing if you can take on extra opportunities like sponsor local events or charitable things, or give money away, or have extra money to go do a thing or to add into the business. You'll know when those times are coming because you've planned for it. So it's a great time to all of these things just make everything efficient. I feel like I'm beating a dead horse here, but when you're streamlining all these processes and you've got your workflows in place, you've got your budget in place, you know what's coming, you've done all the tax efficiency, you've looked over your business and personal continuation and estate plan documents. Now you just want to think about, are there any ways where you can make things a little bit more efficient, a little bit more automated, if you will? And for business owners, maybe it's a piece of software, it's updating a CRM, it's simplifying client workflows, it's making things easier for people to interface. It could be a website thing. Maybe you're going to automate things like marketing initiatives, social media posting, blog posting, videos, things like that. For individuals, it could involve automating savings or increasing savings or setting reminders for certain financial tasks. So identify areas where you can make a difference there, streamlining some things. It's going to save you time. It's going to save you money. And I can't underscore the value of considering what time spent on some of these tasks cost you. If you were to think about how much money you earn and break that down into a daily or maybe even an hourly rate, and then think about how much time you're spending on tasks that are below what your rate is, it might make sense to hire that work out and get somebody who can do it faster, better, more efficiently, more productively. And that can be a part-time employee, it can be a full-time employee, it can be a consultant, it can be a fractional professional, any of these things. Think about the value of your time, put a number on that, and then it's going to help you know when it's going to be time for you to pass off tasks or to automate certain things in your business or in your personal life. Okay, so all of this is going to help you start the new year with confidence, and that's the whole point. These year-end steps are about more than just closing down the books and making sure your numbers look really good. They're about setting you up for a successful future, because focusing on these priorities now, as we're nearing the end of the year, it's going to help you start the new year on the right foot with confidence, knowing that you have a plan in place, knowing that you know when the money's coming and when the money's going, and it's going to help you optimize your finances. You'll have clear, achievable goals for the year ahead, and I can't think of a better way to start the year. I think for most of us, we're certainly past the age where starting the new year means a clouded head and a couple of tablets of ibuprofen. I think we're past that, and so get to bed early, get up early, get a good start on the year, and you're going to feel better about where you're going. So if any of this has struck a chord, again, if you want to download this worksheet, go to lifemoveswealth.com. You'll find it there in the blog section. You can always send an email to info@lifemoveswealth.com, and I'm happy to walk you through any of this, talk through any of the considerations, work through your concerns, help you set up certain strategies, change investments, think about tax planning, get you to an estate planner, or help you understand what changes might need to be made in your estate plan. We can look at insurance together. We can look at contributions, all of the things that we talked about. That is the role of financial planning. And if you don't have a financial planner in place who's helping you think through all of those things on a regular basis, I'd love to talk to you. So again, info@lifemoveswealth.com is where you can send your questions, or if you want to set time to talk with me, let's do that. Lifemoveswealth.com is where you can get all this information. Head over to the blog section and download this free guide. So that's all I have for you. As I said, I know we're in Thanksgiving week, so by all means, happy Thanksgiving to you and yours. I think this is going to release right before Thanksgiving, so you might hear it after Thanksgiving, but if so, I hope that your turkey coma is at least somewhat enjoyable and the football is good. I'm going to be glad for the end of college football season because my Florida State Seminoles have been abysmal this year, and I'm just ready to see this season get put out of its misery and we move on. So that's it. I hope you have a great weekend, and until next time, go be financially awesome, and we'll see you on the next episode. Take care. Thanks for listening to this episode. Be sure to like, subscribe, and share. To learn more about your financial purpose, visit lifemoveswealth.com.